I had recorded the session now, so I think you listened those classes, right? Yesterday,
Sorry?
yesterday I had recorded the sessions and I sent it to you now in the group itself.
Yeah, you had sent the link.
So you, you listened the class, right?
No, actually, I attended last class. I missed only 10 minutes of that class. I did not get time yesterday. I'll do it today.
Okay, no problem.
Oh,
So
yeah,
you,
10
you can
minutes.
you can you can watch the sessions again. The YouTube link is in the group itself. So if any guys missed now, so you can listen those classes. So now we'll
Okay.
continue the previous session. So yesterday we had discussed two points. So one is failure to file the return, and another one is failure to pay. Failure to pay. So these topics we had covered. So can anyone tell what is failure to pay and what is failure to pay? So there are 2 points here. So one is failure to file the return, and the one is failure to pay the amount. So that, say for example, if a person is earning like total income, we can say $100,000. So person total income is $100,000. So that is the standard deduction like 12,950. So what is taxable income here? Taxable income in this case. So this 100,000 minus 12,950. So 87050 at the rate of 10%. For example purpose only, this 10%, and it will give you 8705, right? So 8705 is your taxable amount, so which you are supposed to pay within the due date. So what is the due date? So this is the year what we are taking here, 2022 is the year. So he need to pay this amount, the tax liability, before 15th April 15th 2023. So before the due date, this is the return due date, and this is also the due date for the liabilities which we need to pay. So within the due date, he need to pay the liabilities, whatever he need to pay, and he need to file the return. So failure to pay is the meaning, the liabilities he need to pay before the due date 15th April 2023 of the coming year. That is the point here. So he need to file the return the same date, 15th April 2023, and he can get the extension. Extension also he can get now. So what is extension form? What is extension form? No one listen, na? So 4868 is the extension
For
form.
business,
Sorry.
for 1065 it's 7004, but
Yeah,
for
yeah.
1040 is not
Yeah,
sure.
we are talking about only the individual returns only, correct?
Yeah.
So we are completely into individual taxation. So the extension form for the 1040 and 1040 NR is 4868. And for some cases, there are some F bar and FATCA will be there. For that, there are some extension forms we had discussed also, and you will get 6 months extension. 6 months extension. So now the point here is, so if you want to get the extension also, you need to apply 4868 before 15th April. Clear? So if you don't file the return within the due date, you need to pay penalties of, in case of the failure to file, 5% you need to pay on unpaid taxes. So here the point is unpaid taxes. So only unpaid taxes amount only we need to pay the 5% rate. Okay, so this is per month. Per month. Say for example, in this case, you need to pay 8705 is the unpaid dues. So which we didn't pay after 15th April 2023 also. So now we are in the month of June. One moment, just give me 1 moment. So now we are in June, okay? So take for example, we are in June 15th. June 15th. June 15th. We are in June 15th. So how many months? So here in this case, April, May, June, 2 months, right? April 15th to June, and sorry, May, June. So 2 months we need to pay. So 2 months it will be like 8705 into 2 months into 5%. So 8705 he need to pay as penalty in case of failure to file the return. Done. So failure to pay amount also it will be 0.5% on unpaid dues. On
this payment has to be made even if the person has filed the extension.
yeah, the extension is only for the filing thing only. So extension is not for the liabilities which we need to pay. So we have to pay the liabilities, whatever the liabilities we need to pay, that should be paid within 15th April 2023 only. So the extension is only for the filing. So extension is not for the dues. Okay. So this is the most important thing here. So extension is only for filing, but not for paying taxes. Extension is only for filing, but not for paying taxes. Correct? So extension is only for filing the return, but not for paying taxes. You should pay the taxes before 15th April 2023. Okay, so here the penalty is 5% per month on unpaid tax dues, and here the penalties are 0.5% on unpaid taxes. So these are the penalties only. So maximum they can leave you, they can leave like 25%. So maximum the penalties can be 25% on unpaid dues only. So in this case, what is our unpaid dues? 8705 into 25%. So in this case, the maximum the IRS can leave 2176 only. Okay. So even if it exceeds more than 2176, so we need to pay only to the extent of 2176 only. Okay, 25%. It should not exceed more than 25%. And so 2 points here we had discussed. So what is first point? First point, 5%. And here 0.5%. And second point, it should not exceed more than 25% and 25%. And in cases, we need to pay two things. So some cases we need to pay. One is failure to pay tax, failure to file penalty, and failure to pay the amount. So by any chance, if we are supposed to pay these two amounts in a 1 month, now in this case we are in the June month now. In this case, what you will get some benefit in the month of June. So you can avoid the penalties. Say now in the case, we can take an example. In the same case, 8705. Okay, we'll take this amount only. 8705 here. So 8705 is the amount which we didn't pay till June 15th. And in the May month and June month, what we need to pay? May and June. So in these 2 months, we need to pay two things. So one amount is penalty for failure to pay.
Not filing.
Failure to file. And here penalties for failure to pay. In both months, you need to pay two things. So one in May. One moment. Yeah. So in May, you need to pay penalties for failure to file and penalties for failure to pay. And June also, you need to pay two aspects. So the government is giving some benefit for you in this case. So the benefit is the failure to pay amount can be reduced by the penalties for failure to pay. So say for example here in the May month, $250, not $250, $100 we need to pay for penalties for failure to file. And for this case, 10 rupees we can say, $10 we can say. So in the May month, the maximum penalties will be for filing 90 only. Instead of 100, we need to pay only 90. So the penalties for failure to pay will be, the penalties for failure to file will be reduced by the penalties for failure to pay. Clear? So this 10 will be same. So instead of 100, the 100 amount will be reduced from this amount. So the failure to, penalties for failure to file will be reduced by 10 rupees. So which we need to pay 90 here. So 90 plus 10. So totally 100 we need to pay. Clear? Clear?
No, it's not clear. Can you just repeat this example once more?
Okay. One moment. So now the point here is, in case of failure to file, in this case, it will be reduce the failure to file penalty by the failure to pay. Penalty for any month. For any month where both penalties apply. So this is the point here. So what IR is saying in this context now. So failure to file penalties will be reduced by the failure to pay penalty for any month. For any month where both penalties apply. So in any month, say for example, in the May month, what we are paying? So we are paying failure to file penalty and failure to pay penalty. So we are paying both penalties. So in this case, in the month, the failure to file penalty will be reduced by reduced with the failure to pay penalty. So here we need to pay for 100 for failure to file, and here 10 rupees we need to pay for failure to pay. So this amount will be reduced with this amount. So did you get my point here?
Yes.
So in this only for this context only for the failure to file. Okay, so failure to file and failure to pay, both cases. In any case, if you are paying both penalties, so the failure to file penalty will be reduced from, with the failure to pay penalty. This is the point here. Clear? Still confusion, right?
No, understood. That will be offset basically, you are
Yes,
trying to say.
yes.
Okay.
So in this context, we are paying 100 for failure to file and 10 for failure to pay penalty. So these two penalties, so we need to pay actually 110, but this amount will be reduced from this amount, failure to file. So here we need to pay only 10 and 90, and 10 we need to pay as usually. So it will be totally $100 we need to pay. Okay, when
One more.
Yeah, one more.
One question was there. You mentioned that failure to file penalty will be offset from failure to pay. But if we reverse this example, suppose failure to file penalty is
It
10
won't
and
happen.
failure
It won't
to pay.
happen. Why? Because the
5% is
5% and 0.5%. Here 5% and 0.5%. So it will never happen.
Okay.
So failure to file, what is the penalty? 5%. Failure to pay 0.5% only. So it won't happen for sure. By any chance also it won't happen. Don't worry. Okay. And this is one point for this. Yeah, second point and third point. So here failure to file minus failure to pay penalty. Okay, and this can be reduced, one benefit for you. And failure to pay penalties can be avoided in some cases. So when can we avoid these penalties now? So you are supposed to pay 8705 now. So you have to pay at least 90% of this amount. 90% of this amount. So if you are paying 7834 before 15th April now, so then you can avoid this failure to pay penalty. So you should pay at least 90% of the amount. Okay, 90% of the dues, and you this is one point, and you should take the extension before the due date. So you should pay 90% of the dues, and extension should be applied before the due date. So these two aspects should be done. So then only your failure to pay liabilities will be reduced. So you can avoid these liabilities. 0.5% you no need to pay. Clear? So these are only penalties. These are only penalties. So you need to pay interest as well for this case. So interest will be yesterday we had discussed now. So market rate plus 3% additional. Say for
3%.
example, yeah, market rate is in our example say 12%. So you need to pay additional 3%. So altogether 15% you need to pay as interest. Then done?
Yeah.
Okay. So with this we had completed the basic all the basics to the 10 party. So now we'll move into the mainstream. So we had discussed some concept of W2. So we don't have that much time, I think. So I think we can go with interest now. So one moment. What is time now?
9:22.
22. So we had recorded this. Okay. So now we'll go and we'll see interest component. Interest. So today we'll finish the interest income. So quickly move into 1040 return. We'll see the 1040. 2020. You can able to see the screen, right?
Yes.
Yeah,
Yes.
fine. So this is 2022 return. So previously these B, C, D, E, F, G, H, I, Z, these are not there in the 2021 return. So these are additional points here, but these are incomes only. So it is clubbed in the one this in one first line only. It has been clubbed previously. So now it is showing separately. These are the wages, so we won't focus now on wages. So now the income is the taxable, I mean interest income. So interest income you can see in the left side, attach schedule B if required. So this is the point you need to make note down. And here there are two aspects, so 2A and 2B. So 2A is exempt interest and 2B is taxable interest. So in the interest, how many types? 2A and 2B, I mean exempt interest and taxable interest. And one more point, for this you need to attach schedule B in some if required. So these points you need to make down. And now we'll discuss interest. So interest are two aspects. So one is exempt interest, exempted interest, and next one taxable interest. So what is exempt interest? Exempted interest. So what is the exactly meaning of exempted interest?
When you don't have to pay anything on that interest.
Yeah. So if you are getting the exempted interest, so we no need to pay any tax on it. Correct? What happened? One moment. Okay. So in exempt interest case, we no need to pay any tax on it. So in taxable interest, we need to pay. So what is the line number in 1040? This is line number 2A and this is line number 2B. Okay. So we just now see now this one. So 2A and 2B. Okay. So basically we are doing the federal things only. We are doing federal income taxes. Federal income taxes. So as far as federal concern, so interest will be exempted only in case of the amount, the interest amount received from the state government or local government. How many types of governments are there? Federal, state, and local. Na? So as far as federal concern, so if you are getting any interest from the state government or the local government, you no need to pay any tax on it. Clear? So in what case, in which cases we no need to pay any tax? State government or local or municipal bonds. So any amount received from the state or local or municipal bonds, so we no need to pay any tax on it. So it is straight away exempt from the tax. Done?
Yes.
Okay.
Yes.
So now the point is, if you are getting interest from federal bonds, we need to pay any tax on it or not? Say for
Yes,
example,
we have to.
Yes, we pay.
we have to pay on the federal bonds, but these federal bonds will be exempted in state and local. So for we need to file federal return, state return, as well as local returns. So three types of returns will be there. Now we are discussing about only federal only, so don't worry. So federal bonds, interest on federal bonds will be taxable in federal and will be exempted in the state and locals. And state government or local bonds, I mean interest on those bonds will be exempted in federal. Clear? Done?
Yes.
Okay.
Yeah.
Okay. So now another point here is by any chance you are getting refund from the IRS. Refund from IRS. So you had filed in the 2021 year. So in the 2021 year, you are supposed to receive refund from IRS. So for that, the IRS will give you refund amount plus some interest. So this interest amount will be taxable in the year in which you received the amount. So in this interest also will be taxable. Okay. Interest on tax refund is also taxable. Done. So how many times we have discussed? So one point here is state or local or municipal bonds will be exempted from the tax. Interest amount will be exempt from the tax, and the refund, interest on refund here. And third point
Interest on refund, is it exempted or taxable?
taxable. Sorry. Okay. I need to write here now. Okay, this is exempted, and here first point, this is taxable, and second point here, if you are getting any gift from the banks, like say for example in India, ICICI one bank is there. So if you open an account with ICICI, so they will give some gift. Okay, so they will give some gift. So in this case, we need to consider it as the interest income only. So we need to consider it as interest income only when basically it is exempted. So when the amount is less than $10, when the amount is less than $10, okay, when the amount is less than $10. So any gift received for opening an account with any bank, so the amount is less than $10, so it is straight away exempted. And that deposit amount also, so for that we need to do some deposits. The deposit should be less than or equal to $5,000. So then only it will be exempted. And second point, if you are receiving any amount like gift amount more than 20, and you are depositing more than 5,000, in this case we need to treat it as income only. Done? Clear this point? Clear this point? So if you are doing some deposits in any bank less than or equal to 5,000 and your gift amount is less than $10, so exempted. And if you are doing any deposit less than or equal to 5,000 and you are getting the benefit more than $10, you are supposed to pay tax on it. And in the second case, your deposits are more than 5,000 and you are getting more than $20 as gift, you are supposed to pay tax on it. Clear or not? So we'll go
Gift
with an
from
example.
whom?
Sorry, gift from the bank. Gift from the banks for opening this account. So if you are supposed to open an account in USA, you are supposed to pay deposit amount. Okay, so the deposit amount should be less than or equal to 5,000. In case the deposit amount is less than or equal to 5,000, so you might get some gift. So the gift value should be less than 10 only. So then in this case, you no need to pay any tax. So in my example, I am opening an account with some one bank and I am getting one gift worth rupees $20. So sorry, worth $20. In this case, I need to pay tax on it. Why? Because it is more than 10.
This gift has to be in cash only, or it can be in kind as well?
Anything. It can be anything. The gift can be anything.
Like
So,
vouchers and all,
yes.
everything is covered.
Yes.
Yeah, so market value will be taken.
Yes. So here
also the deposits should be less than or equal to 5,000 only at the time of opening account, right?
yes,
Or
is
is
the
it like
at the time of account only.
okay?
So I will ask you an example. So you need to tell. So my deposit amount is 10,000. I am getting gift as $15. So can I include in the taxable income or else I can exempt it?
Taxable income.
Sure.
Yes.
It is exempt only. Why? Because if the deposit exceeds 5,000 and the gift should be exceeds 20, then you need to consider it as income.
But in the first line you have given as gifts $10, right? And you're right
The
now you're
deposit
having
is
it
less
as
than or
50.
equal to 5,000. Here the deposits are less than 5,000. So here deposits are
What are the
10,000.
conditions?
Yeah, I will conclude it now. So just give me one moment. So deposits are less than 5,000, less than or equal to 5,000, and when it will be taxed. So we'll discuss the exempted thing. So it is less than exempted cases. Exempted. So more than 10, taxable. And coming to above 5,000, below 20, exempted, above 20, taxable. That's it. Clear now? Now clear? Still any doubts? Say yes or no.
Clear.
So
Clear.
deposit amount is less than or equal to 5,000.
Yes.
And it is the gift amount is less than $10. So it is exempted. So gift amount is more than $10. It will be taxable. So deposit amount is more than 5,000 and it will be exempted in case of it is less than 20. It will be taxable in case of it exceeds 20. That's it. Then so there is one bonds called so this is third point, and coming to fourth point. So there are some bonds. US savings bonds are there. US savings bonds. So there will be some series. So series I, series E, series EE. So these are the series here. So US savings bonds. So series is I, E, EE. So these will be any interest received from these bonds will be exempted. Will be exempted only if it is used for education purpose. So interest on US savings bonds. Okay, interest on US savings bonds. It may be I series or E series or EE series. In these cases, it will be exempted. Only the amount is used for the education purpose. Education purpose exempted. Education purpose exempted. So other than education, you need to pay tax on it. Done?
Okay.
Other than education purpose, you need to pay tax on it. This is the point. And these bonds are education bonds only. So that's why we are separating if it is for education purpose or not. So these bonds are also known as education savings bonds. Education savings bonds. Done? And for any interest, the tax, I mean the payer, the interest who are giving to us, so the payer will give you one form. So the form name is this is source document. So this is source document. Source document. Source document for interest is 1099 INT. Okay, for any income, the source document will start with 1099 only. So 1099 series is only for income. So in India, there will be like in case of salaries. So what is the source from? Pay slips they used to give. Correct? In case of India, if you are getting any salary, so they will give you one supporting document for the salary. So that what we are calling here is pay slips. So likewise in US, for every income, they will give you some supporting documents for the income. So if you are getting any interest from any person, so they used to give the support source document. So the source document will be for interest 1099 INT. 1099 INT is a document for the interest. Clear? Clear?
Yes.
Okay. So if you in questions, so if you find any 1099 INT, so what it means? So it is interest. Done? Done?
Yeah.
Okay. So we had seen this form now. So attach schedule B if required. So we'll see this point here. So schedule B we need to attach along with 1040. So in the 1040, you can enter the amount here. Like 2000 straight away we can enter. But if this amount, this 2000, whatever we are entering, if it is exceeds more than 1500, if the interest amount exceeds more than 1500, we are supposed to attach schedule B. Schedule B, we are supposed to attach. What are the cases? Schedule B. So if interest exceeds 1500, so then we are supposed to attach schedule B. So it is not for the exempted cases. So it is only for the taxable cases only. So the taxable amount exceeds $1,500. We are supposed to attach schedule B. Clear?
Clear.
Yeah.
Schedule B. So for the schedule B, if the interest exceeds $1,500, then so quickly we will see the schedule B. Schedule B 1040. So there are three items here in the 1040. So interest, dividend, and the F bar, foreign account and trusts. So these are the categories. So in schedule B 1040, so what is the first part? First part is for interest. So in this column, I mean in the entire format, what you will find now. So from where you are getting the interest here, you need to enter, and the amount, whatever you are getting the amount, we need to enter here. That's it. So for this, separate, there is one separate schedule. So if our income from the interest exceeds 1500, we need to attach schedule B for it. Okay, done. So in the schedule B, what is the part? So part 1 is for interest, part 2 is for ordinary dividends, and part 3 is for F bar. F bar. We had discussed this one, since in form 114. Right? Right? Did we discuss this one? Hello.
No.
We had discussed yesterday, in the yesterday class we had discussed.
Okay, yesterday I was.
Yeah, I think you missed the
Yes, it
yesterday
was
session.
discussed.
So you can watch the yesterday session also. So then you will understand these points.
Yes.
So with
Okay.
this we can conclude the interest portion. So tomorrow, so 2A we had finished, 2A and 2B. So can you please repeat these topics? So I think it is 1 minute more. So can I send one more link, or else can we stop here?
I am available.
Okay, so just quickly we will revise these topics and we'll finish. Okay, I will send you one more link. You can join in the session.